Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, coming to you live from the live trading room of drstoxx.com website. That's drstoxx.com. And if you go there and click the subscribe button and scroll down to the live trading room, you can join me and a whole big group of great people who love to trade at all different skill levels. I jump on the live mic a couple of times a week and do some training with the traders and look at charts and do some chart analysis and take chart requests and that kind of thing. But I also tell you every day throughout the day, I tell you exactly what I'm trading, what I bought, how much I paid for it, where I'm putting my stop price, where I'm getting out if it goes in my favor, and the size and all that kind of stuff, the reasons for the trade. And if that's of interest to you, you can join the live trading room here and you can add on the live options room at a 40% discount as well. All right. Let's get started. We're going to jump over to charts. We've got index charts here. We are in a modest, I would call it a profit-taking pause in a very strong move that was done on Friday last week. So the market, I was just telling the people in the room, the market on last week was really trapped throughout the whole week by the Fed Powell speak at Jackson Hole on Friday morning. So Monday through Thursday, we had a pretty weak market. It wasn't a sell-off by any means. It wasn't even really a pullback, but it was some consolidation, some discounting, some profit taking that took place. And when you're in a market like that, where the rips get sold into at resistance and the dips get bought back at support, and you want to you want to maximize that movement as much as you can. Well, here the one thing you can do is, of course, you want to buy down there at support. You don't want to buy up at resistance. That's in a market that's trapped like it was last week, and it's going to be again this week with NVIDIA reporting earnings on Thursday, PCE prices coming out on Friday. You don't want to buy the highs. You want to buy the lows. You want to buy at support. You want to buy those dips. And then when it gets up to resistance on an intraday basis, at least the hourly chart, 2-hour chart, you can take a little bit of off the table, right? Take 25%, 30%, 50% off of your position in anticipation that because it's a trapped market, it's going to come back down again and hit a level of support. When it hits that level of support, what do? You buy those shares right back again at a discount. Rinse and repeat, rinse and repeat. Now, you don't want to do that, however, in a market that is really rip-roaring and breaking all kinds of resistance and just trending nicely higher every day. But you can do that in a market like this one, where there's a lot of intraday movement, but not a lot of day-to-day movement. Okay, so the S&P 500, let's go to the daily chart. We've got the cycles indicator down here at the bottom. They are rising, and all of the cycles are either up or flat. The purple one here is the one you want to pay attention to, which is the long-term cycle, and it hit a peak back here in late July, and it's now you can't see the movement very clearly because I don't have it stretched out. If I stretched it out, there you can see it. It has come down, indicating a cooling off of the long-term cycle, but it has flattened out and maybe even starting to tick a little bit higher. So I do think we're probably a couple of days still away from a new bullish leg kicking in, and I don't think we're going to get the start on that until we get past NVIDIA and maybe past PCE prices. It's only Monday this week. That's Thursday and Friday we're talking about. So I think by the time we get out to next week, by the time we get to the 1st of September, we should have a much clearer horizon for bullish moves in the market. Until then, a bit of consolidation, pops and drops, and as the market likes to do. So the S&P 500, just a tad under all-time highs, looks like a pretty good chart. It's not a breakdown chart. It's not a topping out chart. It is a bullish pattern right here. Consolidation getting tight, 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 tight. I think we'll continue to be tight until we get out at least to Friday morning when we'll know what NVIDIA has done and we'll see the PCE prices. Now, I have to say that there is a strong contingent in my pro trading group that sees a pullback in the market for the first couple of weeks of September. And they're already positioning for that. In fact, they're starting to scale out of their longs. They're starting to put on some index puts. I don't blame them for doing that kind of thing. I just don't see that yet in the charts. get out to the later part of the week, maybe we can start to see some weakness there, and then we can take some more bearish positions. But we're not there yet. We're not there yet. All right, the Nasdaq is looking a little. Actually, I like the Nasdaq better than the S&P 500 right here. Let's get rid of those two lines. Why? Because the S&P, the Nasdaq, unlike the S&P, has already done a pretty nifty pullback and tagged the 50-period moving average. That's even below the LRC, the linear regression channel. That's a pretty sizable move. The thing I don't like about it, you're going to see this in a lot of charts, is that the move on the pullback was sharp, right? Not quite a cascading waterfall straight down, but it is more than a 45% angle. My rule of thumb is that a 45-degree pullback or less is ideal, and anything greater than that tends to lead into more downside, even after a good bounce. But with that said, we do have actually, and you're going to see this on a lot of charts, a pretty nice looking consolidation move right here at the top of the Nasdaq, just underneath all-time highs, above the rising 50-period moving average, in and around or above and below the 21 EMA, way above the 200-period moving average. And you've got the cycle starting to rise higher. You've got the MACD not quite in a bullish buy signal yet, but getting there. And you've got this nice big bullish engulfing stick off the 50 that happened on Friday. Took out all kinds of lows, triggered a whole bunch of short stops, and on pretty good volume as well. Friday was a heavy volume day, and we're in the top fourth or fifth of that bar today, which is a very good place to be. That's consolidation of that move. The market is saying, hey, that was the real deal. It wasn't a one-day wonder, and we're not about ready to reverse it today. So the fact that we're not exactly seeing follow through, I have to say that, but the fact that we're still up there at the top, we're still above the 21, and we're coiling up here on the intraday charts is a very good thing, bullish. For me, I know there was a nice breakout in the small caps on the pivot, the dovish pivot of Fed Chair Powell on Friday, and that's a good thing. We want to see the small caps very happy. I just don't see them sustaining a longer term trend over the next few weeks. So I really would rather have us focus on mid cap to large cap space, but not necessarily in tech, although there are some good exceptions to that. I think some of our best trades will come from like a mid cap industrial play, or a large cap financial play, or we're in the options room, we're in some new calls in a stock that I really like that's in the financial space, asset space, right? They own data centers, and they own real estate, and they own utilities, and it's kind of this conglomerate, very in favor now with hedge funds. And that's the kind of play I'm kind of looking for, a little bit off of the tech gradient. Now, there are some good plays, and I'm going to show you here in just a minute. In the quantum computing space, there are good plays in the software space, software as a service. We're not quite seeing the cybersecurity group come back just yet. They're deeply oversold and I think undervalued, but we need to see them get a little stronger before they come of interest. But one of them, Net or Cloudflare, is not too bad. You're going to see some in the satellite tech space, and anything related to data centers and the energy needed for data centers, the infrastructure for data centers, like our NBIS, are good plays now, in my opinion. Okay, but let's just, as far as indexes go, I think QQQ, TQQQ is a good one. We'll see the SMH or the SOXL semiconductor space looking pretty good as well. But I think for me, the small caps had a great one-day wonder. I have a feeling they're going to kind of pull back or just consolidate, or not really outperform the way we would want them to. And I could be totally wrong. I think the market overshot Powell on Friday. That's my thesis. And I'm not an economist, so I could be totally wrong about that. But Powell gave us a dovish pivot. That's what the market wanted. But we're still only talking about a 25 cut in September, and I'm not really sure what's going to happen after that. And PCE prices on Friday could totally upset the cart. So we'll have to see where that goes. All right. I'm getting too long winded. Let me roll over. First of all, let me take a look at SMH because I did want to show you that chart. There it is. Okay, so this is what I like. This is let me enhance it a bit here for you. This is a 45-degree pullback, 45-degree angle pullback. That's perfect. Just exactly what you want. We had the tag of the 50-period moving average. That is a big, big flush out move on heavy volume, getting rid of all those weak hands, all those new longs, sucking in a whole bunch of shorts, and then it it gave a little bit of a hint that it was going to continue down on Thursday last week, and then we had the big reversal on Powell on Friday. Nice looking pullback, right? 5, 6, 7 day pullback, tagged a major moving average, got below the LRC, got back into the LRC above the 21. Follow through day to day. On the outside, let me get rid of this stuff so you can see it better. On the outside, the upside, I should say, of a resistance trend line, an RTL. We had a peak above that on Friday and follow through day to day. I like it. I like it. If I had to buy only one index here, I would buy the SMH. And if I had to buy a second one, I'd probably go with the software space because it too, it's a little more of a prolonged pullback, right? This is more of a month rather than 5 or 6 days, but it is soft. It's not a cascading fall like we saw with a QQQ. It's a soft, less than 45-degree angle. We're down into the pink space of the LRC, which is 2.0 standard deviation. Typically, that's where you see new uptrends start. It's not a buy yet. In terms of the whole software space, not a buy yet. You want to see a close above the RTL. We're also below the 21 and the 50. It would be nice to at least get back above the 21 to make confirmation there. All right, let's go to the greens list. We will rank these by worst today to best, and we'll go through these. Well, actually, let's try this first. Let's go to the stocks on my greens list. These are stocks that are showing good, solid buy setups in uptrends for the most part, and these aren't downtrending stocks. These aren't recovery plays. These aren't deep value plays. These are for the most part, strong growth, showing strong price chart action, good momentum, good volume, good traction on the social media boards, maybe some strong analyst support. Hedge funds are buying these. There are all kinds of reasons why I'll put a stock on the green list, but the most important one for me is the chart. So let's see if we can find a pattern here in some of these stocks that are at the top. So we've got Rocket Lab, which is one that we are in the options room, and it's in breakout mode today. This is a satellite technology company, communications technology company. Is doing really well. And here's another one just like it, ASTS in the same technical space. And this one, yeah, also showing the same chart, right? So memorize this chart. I would have to say this is maybe a little longer of a pullback than I would like to see, but it's nice and soft. It goes down to the lower edge of the LRC. It starts to build a little bit of a bullish base. Volume starts coming in. We have the breakout day today above the 21 and above the 50. Back into the salmon zone of the LRC, which is good. Your cycle, long-term, medium-term, and shorter term are all rising higher. MACD from below the zero line, which is where you want it to be, is just about to print a fresh buy signal. It all looks good. All looks very good. This little buy signal right here, by the way, is an RSI indicator. So I have a friend who developed this. You can't get it without buying it, but he tracked the RSI. He has his own kind of proprietary RSI. I don't know, understand it. It goes down below negative 70, and that's the first part of the buy signal. And then when it rises back up above negative 70, it flashes a buy. So this is maybe a little bit early. Here's one that's a little too late, but here's a pretty good sell signal, right? So I would say about half the time these signals are worth paying attention to, and half the time they're either too late or too early. So We'll see. We'll see if that one plays out nicely. So we've got two stocks pretty much in the same space that are up there at the top of the list. So that's a nice looking pattern. And um, yeah, so there's that, right? PGY, I know this is, I'm not sure what this is. I know the ticker symbol, but here's a good looking chart on the verge of breakout. So we looked at pullbacks, right? You want to see a soft pullback, and this is about as good as it's going to get for a sideways consolidation, rounded bottom. I don't know if that's a cup and handle continuation, kind of is, but it looks very, very good. And today is breakout day. It's the highest. I don't know if this is an all-time high. I assume it is. No, it's not at all. But it is maybe a 52-week high, and it's showing very, very nice volume accumulation down here. And yeah, so that's a good-looking chart. Clean Technologies, don't know what this is either, but I assume it's something like an alternative energy play. And why is it on my greens list? Because of this right here. This is very, very nice. Is it in an uptrend? Yes. Look at the angle of the LRC. The 21 is above the 50. The 50 is above the 200, indicating stacked MAs, which is an uptrend. And all three of those, maybe the 21 is not, but the 50 and the 200 are rising. All looks good in terms of an uptrend. Came down, tested the lower edge of the LRC, the 50-period moving average, rose above it, back to the 21. Looks like it wanted to break out today, but wasn't quite ready to do it. As I said, the market's trapped. Can't get any higher, really, on average, until we get past Thursday, Friday. But this is a very nice looking setup. You could buy it here at 1108. You would put your stop, I would say, about 1010. So a little bit of a, like a 10% stop loss is a little bit on the larger size, but that's where you have to be. And then you would get out up here in the blue zone, 1516. Right? Nice move. Really nice looking move. We went long NBIS today on this little dip down into, what was it, around the 67, 68 level. Right off the bell, it started dropping, and I just kind of looked at it and watched it, and I got drilled over to the 2-hour chart, which is this one right here. And it was down here for about 15, 20 minutes off the open. And then it started to rise back up, and that's when we bought it, and it's been all up ever since. Oops. So here's your nice looking, right? It's a gap up on earnings. That is a power gap. It hasn't come into that gap, hasn't closed inside that gap yet, at least. That's a very good sign. It's been out a couple of weeks at least. Came back in to test the 21-period moving average in the top of that gap, and it's just been all up ever since. When the market's been pulling back, this one is rising higher, and now we've got the breakout move above the RTL today. Very good looking setup. Excellent company. All right, one more here. Let's do OKLO. So we bought this one as well. It was, it was a straight shot down right off the bell because I almost bought it. Like within the first 5 minutes of trading today, I almost bought it because it was down to like 70 and small change. And then, I said in the room, I'm going to buy some shares of OKLO. And I'm looking at the 5-minute chart, and I just keep seeing, 70, 69 and a half, 69, 60, 68.50. It got as low as, where was the low today? 67.85, as low as it's got. And it held that level for a few minutes, which is a good thing. And when you look at the intraday chart, let's go to the hourly chart here. When you look at the hourly chart, where did it open? I think that's no, that's not the opening. This is the opening bell. No, it couldn't be. This one right here. Sorry, this red stick right here was what it looked like. Opened way up here around 71.40, dropped all the way down to, as I said, 67.85. And then it just started slowly, within that first hour, started to climb back up again. And I'm not exactly sure where we bought it, but it was between 69 and 70, I think, something like that. And this is one, by the way, that I've done this today already twice. It's one where you can trim off some profit shares at the top and buy them back on a dip. So if you look at like the 5-minute chart, Okay, so where's the open? This is that big red stick right here, big red, ugly red stick right off the bell. And it kept going down for, another 15, 20 minutes. It hit the 200 period moving average on the 5-minute chart. I have that same moving average on my on the trading platform that I use to monitor these 5-minute charts, and printed a reversal bar, and then it started climbing higher, and that's when we got on board. Now, if you look at some other previous intraday highs, back here a couple of days ago, the open today, then when it got up here, tagged that level and started to reverse, you skim off the top. You take some profits off the top. Watch it come down. You want it to see it keep above the 50-period moving average if possible. It hits the midline of the LRC, goes sideways for a little while. That's where you can buy it back, right? So you sell your shares up here at 71.20. I'm not sure where I did mine, somewhere around there, 71.20, and you buy them back at around 70.35. So you've just already shaved 85 cents off of your cost basis for at least those shares. I wouldn't do this with the whole position, right? Because if it does keep going north, you're going to really feel bad that you missed out on that trade. So just take 25% or 50% and do that. And now it looks like it's ready to trim off a little bit again. And here we are. We still have another hour and 15 minutes of trading. So yeah, go ahead and do that if you're into that sort of thing. I'm too busy with you guys right now to do it, so I'm not going to do it. So here's OKLO. OKLO hasn't quite given us the buy signal that we want, but I love this A, B, C wave down, reversal bar off the 50-period moving average, follow through 2 bars later, 2 days later, and a pretty good hold after we saw that early dip off the open. It's not a perfect setup, but it is a much in demand stock with lots of good analyst support and social media board support, and those things can go a long way in a stock that might be a little bit more of a risk-taking adventure. All right, now let me pose a hypothetical here. So actually, let me look at a couple more charts because I have my eye on net. And it is doing this kind of rounded bottom, right? And I like that. I like that pullback. I like that rounded bottom. Here's your flush out day. Thursday, which is a down market day, it was up off the open, and not a whole lot of follow through on Friday, but it is in the cybersecurity space that's been pretty well hampered down by, I don't know what, competition, China tariffs. I have no idea, but it's Palo Alto and CrowdStrike and Fortinet are having some trouble, and this one is not. So this one is kind of leading that group in a good way, and I like this setup. Fundamentals are good as well. I have got some XYZ shares. This is formerly, what was the original name? Squarespace, and then it was Block. And now their ticker is still Block, but now the ticker symbol is XYZ. You can tell me why it's that. But I like this. It's forming a high tight base up near 52-week highs. Lots of good constructive action down here on the 200-period moving average, 50-period moving average, pink zone of the LRC, rising 21. And it has some work to do to get back up to its former heydays. This was a big momentum stock, well in the 3 digits. And it has come way, way down. And now it's forming a nice tight base up at the 52-week highs. And this is one where you would want to buy down at support, which is what I did a few days ago. And then you'd sell up here at resistance. Okay. Was there one other? So we're along a WDBD. This is in the communications. It's Warner Brothers, right? So they do streaming services, and they own a bunch of TV channels and movie studios and so on. And it's just a nice looking chart, right? It's a nice looking chart. So here is your relatively soft pullback, 45-degree pullback. It broke out on Friday. We got in early Friday, and it's now above our entry price, and we have some confirmation going on today above the 21. I like this as a smaller, lower price stock with it's in a good space. One of the spaces that's going to be recipient of inflows when tech stocks and blue chip tech and the mags cool off a bit, and they're probably going to cool off over the next few weeks. So I think this is a good recipient of some new inflows from outflows of that space. We got long hood on a dip this morning, and perfect, just nice looking chart. Uptrend, uptrend, uptrend. Every dip getting bought. Nice, a clear line of support running higher. A bit of tight consolidation up here near the 52-week highs or all-time highs. And yeah, this is just a Hood has all kinds of good stuff, good reasons to buy it. It's a buy the dip stock. All right. Now let me. Oh, one other one that I wanted to show you. We bought calls of this one in the other room. This is the one I was talking about, the conglomerate that owns real estate and energy and utilities and solar farms and all kinds of other stuff. In addition to managing funds, which is their primary business, massive amount of income in this play. And here's the thing: the dollar's been weak, inflation still a bit of a sticky thing, but rates are coming down. And when you put those two things together, your money wants to go into assets, not necessarily into notional growth going forward, right? You want to buy hard stuff. And this is a company that deals in hard stuff, assets. And so these are the kind of plays. You can also think of Bitcoin and Ether as being two assets that you can own. Real estate plays, assets, gold, silver, assets, material stocks, steel stocks are asset plays that we want to at least be open-minded to when they show a nice looking chart like this. Okay. So here's the thing. Now let's take a look at BN versus NBIS. We bought NBIS in the live trading room. We bought BN calls in the options room. I liked both of them, and I still like both of them. And but let's say you could only buy one. They're two very different companies, but that doesn't really matter. You like both of their charts, you like the stories, and you only have enough money to buy one of these guys. Which one are you going to buy? Well, there are all kinds of things you can do to rank one company against the other. Let me just show you a few things that I do. Some of this I've talked about before, but one of them I want to show you that I haven't done before. One of the things you can do is you can go, even if you're not a member of Investors Business Daily. I'm a partner of Business Daily. I promote their market search, charting and scanning and stock evaluation tool, which I love. And I also have access to the leaderboard and to Swing Trader and a bunch of other things. But what you can do is, where's a little, is it here? Okay, we're going to type a ticker symbol in and see what shows up. So let's do Brookfield, which is the one I was just talking about. Okay, so you're going to get, even if you're not a member, you're going to get this information right here. Standard proprietary Investors Business Daily ranking tools for stocks that you might be interested in. Okay, so Brookfield has a comp rating of 61. Okay, that's a little bit on the lower side, but that's partly because it's not a momentum stock. Your comp rating for IBD, you always have to understand they give a lot of weight to price momentum. And Brookfield is just a pretty sluggish, big conglomerate. It doesn't really move that much. Now, here's some other kind of negative things I'm seeing here. So it's ranked 42nd in the group. AAMI, which is a stock I don't know, is number one in that group. So that's pretty far down, right? It's not really up there at the top. Then going down, you've got EPS rating of 42. That's not that great. And here's why. IBD puts a lot of emphasis on margins. They have very, very slim little profit margin. They are profitable, but they have a ton of revenue. But because they're so asset intensive, their profit margins are very small. Strong relative strength. The group that it's in is good. Accumulation distribution, which is very important. Are people actually buying the stock? Is a very good B plus. Okay, so you've got those numbers, right? You've got all that ranking there, and then let's put in NBIS and see how this one ranks. Sorry for the noise in the background. The dog is doing something. Okay. All right. Well, this one is a little better. 64 is a little bit better than 61, but still not that great. 21st with PLTR, which we also own, right? And we have calls in the other room. Is ranked number 1 in that group. Why? Because of not necessarily fundamentals, but because of price momentum. And NBIS is 21st in the group. I don't know how big of the group is, so that's not really, in terms of comparison, not really good information. This has 3 reds. I think the other one had 3 reds, but 3 greens as well. This only has 2 greens and 1 yellow. But here's the important one for me. The accumulation distribution is an A. That's maybe gives this one a little bit of an edge compared to BN. Here's the other thing. This is something I haven't shared with you before that you can do. I'm interested to know with people who are professionally in the market. They're either economists, they're analysts, they're trading their own fund, they're trading a hedge fund. Or they're journalists and they're talking about people doing that. What do they think about these 2 stocks? Well, the way to do that is you type in the ticker symbols. You have to use a $sign, otherwise you're going to get all kinds of other junk that you don't want. So $BN. Scroll down. Make sure you've got the top selected here, not the latest, because then you're going to get all these scammers that are just pumping it. Go for top. These are the highest ranking posters on Twitter. And what are they thinking? Well, when I do this, I end up learning a lot more about the company that I would have not understood just trying to dig around in my own using a Google search bar. Here you've got a coalescence of research information that can tell you a lot more about the company that you can, within 5 minutes, than you can learn doing research on your own. So I really like this as an investing trading tool. But you do have to take it with a grain of salt. Some of these guys are worth listening to and some aren't. And you'll know pretty quickly the difference between the two. When they give you valid, supported evidence for a company's bullishness, then they're worth listening to. If they're just pumping it and they're out there, promoting their own position, that's not worth it. All right. So here, this guy's got a really good write-up on BN. Why is it a bullish thesis? And then he's got some supporting data, right? Here's something I just learned about BN today. They are pumping $200 billion into building data centers over in Europe. And that's going to be absolutely accretive to their bottom line. Bill Ackman, who is a big hedge fund manager, very, very successful, only buys 8 stocks at a time. This is one of his stocks, and he was out recently buying more of it. So that's positive. And 3 themes that if you like these 3 themes, then you'll like Brookfield, right? Because it satisfies all 3 of those themes, right? So that's one tool that I really like and use a lot when I'm stuck between more than one company and I'm trying to decide which one. Now let's do NBIS. So you're going to get technical analysis as well. And I have no problem with that because I use technical analysis. I want to know what do the Elliott wave theorists think? What do the Fibonacci people think? What do the chart pattern people think? And so you're going to get that. Here's a guy doing a chart pattern analysis. Here's a connection between NBIS and NVIDIA that I didn't know about until I watched this little video. NBIS is they just hired, this is interesting, they just hired a global talent manager that used to work for Amazon and Facebook. Now he's working for NBIS. That tells you something, right? That they're up to something. They're up to something. There's me. You're going to find me in there, some of their, I guess I rank as one of the top. And So the three disruptors in their industries: NBIS, Rocket Lab, and IonQ, with 5 to 10 times potential in the next 3 years. Now, why is he saying this? I don't know. So you'd have to kind of dig down into this guy and see, does he know what he's talking about or not? Sometimes they do, and sometimes they don't. That's just a chart. So here's an Elliott wave theorist who thinks that NBIS is going to pull back. So that would be more of a bearish thing. But he also is showing that it hasn't quite completed the third wave yet, and that would bring it up to about 78 or so by my eyeballing. All right, I'm going to have to let you go, guys. It's 3 o'clock. I need to save at least the last hour for some trading in the room. And I wish you all the best. God bless everybody. I'll produce this video, get a link in the room, and we'll wind up trading the power hour together. God bless. Bye for now. See you in a little bit.